Question I had is if you could explain the differences between a capital asset and the expenses. In the sense that certain things that you're going to buy, they're going to be a capital asset that you can write that depreciation off, where you have the expenses, which you're writing off against the income and the differences between the two.
Absolutely. So I'm glad you said that. And that usually comes up more so, well, definitely when it's time to file taxes. But if you're doing your bookkeeping, then that's something that you're having a conversation about consistently. So pretty much you have capital assets and then you have capital expenses. And so what that means when you have an investment property is that certain expenses that you put into a home is going to be considered a capital asset. It's going to be added to the value of your home. So whenever I say capital assets, that just means that it's being added to the value of your home. So a lot of people like to get really bad homes and fix them up, right? So if you are doing something like a roof, that's going to add value to your home. So therefore, you're able to add that to the value of your property. So I like to give numbers because that helps it all make sense. So if you purchase a property for $100,000, you spent $50,000 on the roof, you have two options, right? I'm not saying both are right, but you have two options. One is to add it to the value of your property, have it be a capital asset, or it will be an expense, meaning that you write it off 100% in that year. What happens is, because it's a roof and it adds value to your property, it's considered a capital asset, right? Something like contractor, let's say if you're paying a contractor, let's say come in and sweep the floors, like they come in to clean up the house, it's all done. That's an expense, right? You write that off 100% in the year that it incurred. It didn't add any value to your home. So that's pretty much how that works. And now how that ties into depreciation is because now that capital asset has added value to your home. So now when you depreciate it, now instead of your home being $100,000, it's $150,000, which you will write off and divide by that 27 and a half years.